like not every day is a great trading day, right?
No, it's not.
You know?
And so it's not. And what I want to, our goal today is I'm going to introduce two other concepts,
Oh,
um, to still kind of give you that edge.
mhm,
But what you just said is very powerful, meaning it we still really need to have a strategy that we're consistent with. And
mhm.
if the setup is not there, then we
Uh-huh.
don't take it. And if we don't
Right.
trade, we don't trade. And that's fine.
Yeah.
But what I hope to convey today is can we recognize why it's not good to trade right now a little quicker, and then
Mhm.
wait until it breaks out of that range. Wait until we get some direction.
Yeah.
So, Susan, just to kind of recap, we were just kind of talking about earphones, killing some time for a minute. Um, and I think you were on when Rhonda just kind of caught, hey, well, she first started it rough trading today, just couldn't find any good trade. And it was really true. And I didn't even really look at a 3 minute time frame today. I was kind of on a different one. Um, but
What
even
time
that,
frame were you on?
I was on a 22 minute EMA with a 7 minute time frame.
Oh.
Yeah, and I share that not only because of one of the things that I'm working through or kind of trusting a little bit is with some of the bots that I'm working. Well,
Mhm.
there is a 10 EMA bot. And so
Oh.
when I optimize that bot on a specific day,
Mhm.
it's amazing of the good data you can get, on the past 90 days or however whatever time frame. But what I'm doing now a lot of times is if the bot optimization says, because what happens is I'll take some default settings, risk, lot sizes, and then I'll say, I want you to give me the best net profit on whichever EMA and whichever time frame, over these 90 days. And so for that particular day, it'll actually optimize and it'll assess, I'll usually put in, from a time frame of anywhere from like 2 minutes up to like maybe about 22 minutes on 2 minute
Mm.
increments. And then I'll say EMA, I want maybe like five, actually I'll usually start around 7 or 8, but I'll say like 8, but give me all the way from 8 to 100, and then I'll do like increments of like 2. And then I'll
Wow.
walk away because that does take a while. But what it
Oh.
does, it'll filter and kind of give me the greatest one with the net profit with a high profit factor, meaning my max drawdown over all those trades is this, and here's what it is. And so what that tells me is that, hey, there's an edge, at least historically, for the last 90 days to utilize this time frame with this EMA.
What you
Wow.
say? It was 20 EMA and 7 minutes.
Yeah, today was a 7 minute time frame on a 22 EMA.
And then it'll
22.
come back and tell you how to trade that, or will it do it for you?
Well, the bot will do it.
The bot will do it for you.
The bot will do it, but the bot will also lose a lot of trades. And the bots are, man, sometimes they're on and sometimes they're off.
Really? Hmm.
Yeah. And so I'm
Like
like, well, wait a
me.
minute. Exactly,
Like
exactly.
me.
The bots are a little too consistent.
Mhm.
But a lot of times that's where I'll also look for that larger reward to risk ratio, and that way when it does win, then it makes up for it.
Mhm.
I did fund a 150K account the other day, and it was pretty much
Wow.
primarily bots.
Really?
Yeah, but that was on Thursday night. I had a bot kick off, and I happened to be watching it because I was sitting here actually optimizing and got triggered into a trade, and I just closed everything out as soon as that funded. Um, but that was Thursday night. But Friday, Monday,
And
and
today.
today's Tuesday, terrible. The bots were terrible.
Wow.
Well, so was I.
So yeah,
Yeah.
yeah, and
Me too.
so, but
They're
me,
taught, they're, they're they're
But
taking out everybody before the FOMC meeting tomorrow.
yeah,
And they're
tomorrow will
all
be
treading water. They're all treading water. Right.
yeah, a lot of indecision and stuff. So what we're going to kind of cover is, well, first, let me go ahead and share screen. Let's come up and just look at
So you're
the,
a push button trading right now, right? Where is that?
it's actually, I know I'm at home. That's just a virtual
Oh, that's a
background.
background. Oh, tricking,
Gotcha.
tricky.
It's a long flight from
Showed you how dumb I am.
Oh no, but you eat good food, and I got to watch you sit there while you didn't know I
I'm
was
not
watching
doing
you.
that again. I'm gonna put my video off next time.
No, that's yeah, because they're in Tennessee. But no, it's just virtual background. Yeah, I'm working with push button a little bit on a lot of their new clients, you know, kind of because of my journey with RLT and kind of coming over, and they really don't want anybody that's gonna like, they don't want people on the phone that are gonna like promise them the world if they do this or that, but like, hey, just kind of share your journey, you know, and it's because it is a slow journey, you know. It's but if you got the correct risk management and a little discipline, you should be able to stay in at the long haul, you know.
Wow.
So let me go ahead and share.
But you know, the way you can see what the market's doing is if you go back to the 15-minute minute. It's hard to wait for the 15-minute candles, and then you don't always get there in time.
Can't really hear you.
I said, if you go to 15-minute candle, you can see what the market's actually doing.
Yeah. Yeah.
But to trade in a 15-minute candle, there is a lot of up or down.
Yeah. Right.
Yeah.
Okay, so here's our typical 10 EMAs, the red one, VWAP. And so, and again, we right away, let me get on the actual mark because it rolled over. So we're doing that contract rollover also too. So you've got to be cognizant now.
So the one
you
that
know,
automatically rolls up into there should be it though, right?
it's not, and I don't know.
It's not yet.
No. Let's go out, go back in.
Doesn't really.
See how I've got this big gap here?
Right.
Okay, so that tells me I'm still on the old one. But all I do within trading view is I look for this little purple arrow and I click on that, and then it says, hey, contract switch. And so then I click on the Z for December.
Oh.
You know, so your transition point, you're still covered. I mean, you're still got pretty good volume even on the old one, but your price is going to be different.
Really?
Yeah. So you really got to be careful, especially if you're, you know, looking at Trade Evade, or you look on your phone real quick, then you're back on your computer. I mean, it can be easy to look at one and correspond a price, and then you're kind of all jacked up. But
Rhonda,
but price action should be the same, but your price may be a little bit different.
Yeah, I just went over and
pull up the NQ1, and they will show you the different prices.
I just went back and found that little arrow and switched.
Yeah, that's the easiest way. And what Susan did mention is absolutely correct. Also, you kind of get rid of this exclamation point.
Oh, okay.
You kind of get rid of that, and then you can expand it here.
Right.
Well, actually, it's not. It's kind of giving me the.
Sometimes you have to click out of NQ and then type it back in. There you go.
Yeah, so we just kind of did that. I got rid of that, backed up one keystroke, but now I could make sure that I'm selecting
Okay, and
Zulu
it should
here.
say December 2024.
Exactly.
Switched my. I kind of stopped everything when I got that notice and thought, what do I do here? So
yeah, the easiest thing for me is click out of the symbol, go back into it, and then back up to where I see this purple circle or this little purple arrow. Click on that, click on December, and then I'm good to go. That's the easiest way. And then price looks like it is about the same on both of them right now. But that big gap is kind of eerie when you first see it, especially like Globex yesterday. Like, hey, what's going on? I was like, oh yeah, we're going through middle of September. It's that contract change, and we'll see. We'll see. But here's our 3-minute and 10 EMA. So what did we have here? And first thing we're kind of looking at is where are we from previous day? So previous day highs clear down here. So we essentially had a gap up. And what I mean by that is if we look at like the regular market, you can kind of see how, Globex is happening here, but from US market close to when US market opens the next day, I mean, that's a pretty big Globex move, and again, wasn't what I was really going to talk about today, but it's very important to realize, hey, wait a minute here. We got a big gap. And one of the things this is a takeaway. One of the things you really want to understand is if you glance at the US market and see these gaps here, know that gaps, they do not want to remain unfilled. So just exactly what Susan mentioned. So you can kind of see here, first it comes down and tries to fill the gap, doesn't quite make it. We go back up, and then right here is where we really get a lot of, I'll use the word liquidity, but right here is kind of the high here. We come up and kind of fight it. We get rejected right here. But here's kind of a key price structure that now we have to respect, from almost start putting our bearish lens on when this rejection comes in. Even though we come back down to this area here, we kind of have this
hit that
this
like
low
3-4 times though.
Exactly,
right?
exactly. And this is what I really want to key in on today is, okay, we've got a gap up. Okay, it kind of comes back down, tries to fill the gap. It kind of comes up. We just hit this price area here, but we really can't make a new high. Kind of comes back down, and there's quite a bit of volume through here. You got this wick here, and then you got 1, 2, these 3 wicks. But here's really your other key price area. So here's the lower part of this range. Okay, this is where I want to kind of pause, stomp my foot a little bit. Your comment earlier, it was tough to figure out what direction to go. When we're in this range, yes.
You got to break
that 10 EMA is going to bite us.
Yeah.
Because we don't have trend yet. We have a range, upper limit here and a lower limit here. Okay. And I'm seeing all this support off of, VWAP. We're kind of coming back up. So I'm bullish. And I actually took, I want to say 3 losses up here. They weren't big, but then I did get in. My body even told me, again, I can switch back to that 7-minute, 22 EMA in a minute, but there was a great entry here, and I'm like, I went for it. And plus we broke this bottom support right here, had this liquidity clear up here. We kind of broke out of this range. Either you recognize liquidity or you're going to be part of it.
I was part of
it. Me too.
Yeah, and
dumb. And when I get in something like that, I go, "What are you doing? You idiot! You shouldn't be in there." It's like, now how do I get out?
Yeah, and it's a a new high of the day, but it just couldn't hold up here. I mean, it created a new high, and so again, been a pretty big bull move here. We're bouncing off of VWAP. I was bullish. And then my stops, I tried different stops today. And if I would have kept my original stop below this candle, I actually had 1.2 right here.
Don't you think it had a lot of slippage too?
What do you mean by slippage?
Well, where it just went right through the stop and didn't stop you out. It was like,
well, it bounced right in here because where I was. And I look back, again, trying to do something relatively new, and I shouldn't have, but I kind of looked at this again, looked at this on too small of a time frame. I was kind of looking at this gap between these candles, and so I actually had a pretty bullish sense right here, and so I'd moved my stop kind of up where I was. Now I got stopped yeah, I think where I was up in here, and I think it was this wick here kind of come stop me out, and then she took back up there. So I ended up losing.
Those
Um,
long wicks.
Yeah,
I
I think I had
measured the 25
I'd
points.
actually added another order up and didn't move my stop. And I had anyway, I ended up losing. I got wicked out. I'd have to jump on a 7-minute time frame. Where was I? Well, let's do this.
Yeah, I measured those wicks. They were 25 points apiece.
Yeah, yeah. So I got in at 7:59, and then I got stopped out at 7:55. So not a big loss, but I
Mhm.
just moved my stop up too tight. But I was really counting on this gap between the top of this wick and then candle 3, the bottom of the wick. It left this gap here. So my stop was, 7:55. It was definitely below this high of this wick, but that was just too tight. It was just too tight. This gap, like from the bottom of this wick to the top of this wick, is what we call a fair value gap. And those are very powerful, but must use them on a larger time frame, not the smaller time frame that you're trading with. That's the mistake that I made.
Mm.
So Susan had mentioned 15-minute time frame earlier, and we'll kind of look at that. And there were no gaps on that 15 minutes. So if I would have actually done it right and utilized a larger time frame, I would have had my original stop, my original entry at 7:59 was right in here with my original stop down below the wick. So I went ahead and got in on this hammer 7-minute
Mhm.
candle. Because again, it was a nice bounce down through the 10 EMA or my EMA that I was using at the time, and actually I had 1.2. It was a perfect trade, perfect setup. And this wick came back down, but it never even come close to taking out the low of this wick right here.
Yeah.
And actually, I'd been just fine. I would have been absolutely fine. So I was not consistent with my stops. I was trying something new. I just completely looked at the wrong time frame when it come to the gap that I was kind of using this gap to kind of keep moving my stop up for this bullish move. Stupid. My original stop was at the low of a very strategic pivot point. I had a good entry, and I should have waited. And I ended up having to wait 1, 2, 3 times. So I had 21 minutes, but again, I'm on a 7-minute candle, so it was
Yeah.
actually, well, it was this candle where it did me. So I did it pretty tight because you can see where my buy and stop was all within this time frame.
Yeah.
But where I got in, why are you not showing me all the things? Because I ended up getting in over here, and then I actually ended up getting 2.2 R's.
Wow.
Took
Yeah.
some profits right here, half 5 micro profit, and then it come down, hit my target down here, and then I got out and I was done. I'm like, okay, because I was up, gave it all back through here. Now, I was up because of Globex yesterday, so I was up around $600. I gave it back here, and then I got it all back plus 200 here.
Wow.
So I was up overall, but biggest takeaway is we opened with a gap, so we expect that to get filled. It didn't quite get filled here, so that should be one right there. Hey, if you got a stop down here and you still got a gap below you, don't be moving your stops too quick because these gaps like to get
Gonna come
filled.
down there. Yeah.
Yep. That's number one. So, and then we have this bullish move, and again, overall trend has been fairly bullish, the last multiple days. So it's pretty easy to have a bullish bias, and then you got this candle coming in here. Just man, I'm really bullish, but I was already stopped out. Go ahead, Susan.
But Jake, on that one where you made the money back, there wasn't a white one until we got way down below. Most of the profit was
Yeah, here
you.
was
You did it right there at the bottom of that white candle.
yeah, and again, I did kind of have the bot kind of, it did trigger in my one account that I'm doing bots. And then I did recognize, hey, we got rejection here. Now we're back below VWAP here, back up, got rejected here at VWAP again. So yeah, I went in with the 10 EMA play, and it happened to be, if we look at the so here's 22 EMA, and on a 7-minute time frame, what was it? What had it been? A bull candle?
There's a bull candle. There was no T on a 3-minute TEMA. There wasn't any white candles to get in on until that. It shows even on the 7th.
22 EMA. Today's Tuesday. Yeah. There was a beautiful 10 EMA candle I thought I was looking at earlier.
It was all
22
black.
EMA, 7-minute.
Why do you like the 22 EMA?
It just happens to be for Tuesdays.
Oh,
You know, when I optimize using the bots, it happened to come up today. So I'm just kind of using that, which is kind of a not the intent of what I want to cover today. But I'm kind of utilizing some bots and
I see.
doing that at the same time. And but I trying to, because it's not this candle here. Oh shoot.
Go back to 3 and your 10. You
But
see, because that's all black.
yeah, well, right here, beautiful hammer, inverted hammer that does interact. So the bots actually won't trigger a trade unless that opposite colored candle actually interacts with that EMA also. So this one here is the one that would have gotten triggered on the 3-minute,
but there wasn't a black candle before it.
yeah, well, yeah.
I followed the rules so hard that
Yeah, I don't want to be throwing confusion at you. You know, the first bear candle, opposite colored candle, which would be a bull candle, the close below our moving average is down here.
Mhm.
And this is about what I remember getting in. So
So
then,
if you were to get in right there where you're at on that bull candle,
yeah,
and it bounces back up, does that freak you out?
not really, and mainly if I've got these lower highs coming here, you know, and now I'm below my 10, I'm below my VWAP, you know, rejected a VWAP there, I'm kind of breaking down. I expect, you know, a little 1, you know, 1, 2, 3. And so here's our kind of like Elliott wave we talked a little bit last week, you know, and then things kind of flatten out here. It kind of comes back up. We get rejected. And then here's another hammer candle that comes in. But no, this is just normal price action. We kind of break down. We're below our 10, back up, and then we're back down below it again. And then I kind of expect that. So if I am in the trade here,
grit your teeth and hang on.
you know, my stop's going to be up above this bearish move. And so this rejection that I see right here at about a 0.6 R risk, when it rolls back over, I'm happy. That's when I go fill up my coffee cup and I'm good to go for a little while. But this inversion candle here, lower high, we're below the VWAP, below our 10 EMA. These, when it kind of comes back up here and you see this rejection, these actually just become opportunities to improve your entry. Say, hey, here's the reason I'm getting in. And if I go ahead and hold off a little bit, it's like, hey, I'm a little extended below my VWAP.
Yeah.
I'm a little bit below my 10, because we can expect that retest of that VWAP. That first time we're kind of, well, it's the second time, but we're coming back down below the VWAP. We can kind of expect, especially if we're still ranging here. We really haven't broke out of the range. You know, so that's another reason to kind of hold off here. It's like, wait a minute here, I'm just at the bottom of my range. You know, are we going to come back up here and get stopped out? Well, when it only comes about halfway back up and I see this rejection, now here's my reason to get in, but I really don't enter until I'm over here. You know, because again, extended a little bit below the 10. We kind of expect a little retest of our 10 and our VWAP, and then that rejection just confirms that, hey, here is in fact a good entry point. So we really don't get triggered in until over here, even though, as Susan's kind of mentioning, there's really no bull candle here.
Yeah.
But here's my first bull candle, and it still remains valid after this rejection right here.
See, I would have thought that killed the whole system, and then I had to restart over. Then I would have had to wait till you were down on the, what is it, your 20?
Yeah, if you're getting in here, which I do a lot of times, if I'm comfortable with the trend, you know, this is range bound, so I'm not. But if I
Yeah.
was to get in solely right here, then you know it'd be like right below that. So I'm wicked in here, but my stop is definitely at a minimum going to be above this. Just say
Yeah.
this is one big bear candle right here on a larger time frame.
So
You got to have it up.
I have a stupid question. It's probably really dumb and I can't figure out why I don't get it. But when you enter, like if you go to that tool, right, and you right click on it and enter your stops, enter all your information, right? You can do that.
Uh-huh.
It doesn't really matter what your risk is at, does it? Because you're going to move that around.
You want to move it around first and foremost. Okay, you
Okay.
want to say, okay, where's my stop going to be? And
Oh,
then
you
when I
want to
bring
move
it
it
up,
first. Okay.
yes, because your stop position, location on the chart is most important. It's just as important as your entry, let alone
And
your
then
take
it tells
profit.
you how many contracts to trade.
Exactly. Now, if I want
Okay.
my risk to actually be 250,
Mhm.
well, then it's going to be basically 1 micro. So we
Mhm.
happen to be in the mini right now, and that's why it's
Right, right.
0.19. But
Yep.
that would be, hey, with this stop,
Okay.
and I only want to risk 250.
Okay. Okay. That was kind of an unanswered question of mine, and I thought
So I'm
I
willing to
must.
assume a little bit more risk when I'm that close. But that just tells me, bam, right
So
there. I'm
set the tool up to where you think blah blah blah, and then go in and change the,
Mhm.
or if you have to,
here
right?
we go. Yep, that's exactly right. So here. I was actually on the micro, not the mini when I got in there. So yeah, so here's where I got in based on this candle over here. Actually, the bot, let me go ahead and hide this. The bot give me a little indicator that, hey, I'm going into a trade, dude. And it was this candle here, not this one, but the bot says, hey, 10 EMA, I'm only going to trigger if the opposite colored candle interacts with the 10. Does that make sense?
Mm-hmm.
In other words, this is our rule
It
as a manual
didn't
trader. Hey,
interact though, right?
yeah,
Yeah.
right. It did not interact. So the bot did not trigger.
Mm-hmm.
But here is what got my attention. I'm like, there's a candle, it did trigger. And let's go back to the
Yeah.
7 minute time frame. I should be able to see that.
Yeah.
You can kind of see all my fancy stuff that I'm drawing here. Um,
I look like that. Mine look
Oh,
like
oh, pretty.
dotted lines going in every direction. They look trying to figure direction.
yeah, it's 22's. You know, we have to go back, I think, into replay mode possibly a little bit here because this 22 EMA now with all this volume down here has moved. Our average is actually lower. So in real time, our 22 EMA was up here.
Oh.
Let's validate that. Let me go into replay mode here. It's way down here. Micro 7 EMA 22 7 minute time frame. I'm just trying to figure out why the bot got me. I mean, it didn't get me. It was actually it
It's right
was it
there with that shooting star, black shooting star, isn't it?
this one right here.
No, the to your left, on my left, back there. Isn't that where he brought you in right there, the white candle next to it?
Yeah, let's look at the actual price. Say I got in 7. So
you
sold
got
here. So this is where I'm losing. I'm a loser up in here. So it was over here. So here was the trigger. The 719.75. So clear up here. 719 is where I bought.
but what triggered it was the white candle up there.
It would have had to have been this EMA here. Dang it. Sell 10 because I sold these 10 here, and that's where I took a profit for a full R here. Oh no, nope. That was okay. I remember now. This is actually just a scalp. I had so this sold 10, bought 10. That was just a $200 scalp. Here is the trade that I did right here. So here's where I sold 10, sold 2. I went short on 5. I remember that. And then I bought 5.
At the top of that big candle for it. Yeah.
Yeah. So I sold 5. I went short up here at 752.50. So right at 72.50. Right in this area here's where I sold. And then I bought to cover at 719.75 here, and then again at 673. So it's clear down here is actually where, yeah, the target was. So I took profits off the table right here of these 5, because I ended up getting in. I remember I had 5 and I got in another 5. So I sold 10 here.
So I think that black shooting star and the white candle that's next to it where you can.
Yeah. Yeah, I got in. This was the reason. It was right through here. So yeah. Yeah, I'm just trying to understand this 22 EMA, because that was what the bot should have been triggering, and yet I remember it triggered over here, and it was a winner on the bot, and then I actually played in, and I got in. It went against me. When it came back down is where I ended up having an additional 5, at my entry point. So I actually had a total of 10 right here. Sold 5 here and then sold another 5 right there. And then over here, I'm like, you know what? I believe I can get 5 points to cut to back to the bottom of this candle. So I just did a quick scalp, and I got in, and it just come down, wicked me in for $200, and I was out. And then I walked away. But that really wasn't what I wanted to focus on today, as much as
Looks like it's playing off the VWAP
exactly. Let me get rid of some of this mumbo jumbo. It was looking at VWAP as support here. That's another reason I was real bullish early, and I ended up losing because I moved my stop too quick here. When I got in here, I moved it would have been profitable. You can see right there, but I ended up moving my stop up into this gap, and I got wicked out, I think, here.
Yeah.
And so then I just recognized we're in a range, but you can kind of see I've got my lines right here. So I was watching, and I like parallel lines to kind of say, hey, am I having some higher lows, lower highs, or what have you? And so I kind of had the range there. And so when this kind of broke through here, and then plus we're getting rejected a VWAP, that's where I was able to get in, and I was fine. But what I really wanted to kind of highlight is we kind of talked about it earlier, but recognizing, hey, You know, for one, here was the best stop to start the day and would have hit target right there. That was good. And that, looking back, is like, duh. But this support here, you see this wick here, and then this this bear candle kind of comes in. That right there is enough to say, hey, I've got a key price zone here and up here that, hey, as long as I'm ranging in between these two lines, hold up, hold up, hold up, hold up, wait, go away for a while.
Yeah.
And that kind of answers your first question, right? It was tough to get into a trade
Yeah.
today. Well, it definitely was, because we're recognizing this right here.
Yeah.
It wasn't until we get out of this range, then do we have, and really we just got the one move to come back down to these other levels. But where do you really see on a 3-minute time frame, 10 EMA?
Put it in 15 and you'll really see the consolidation point.
Yeah. So we're still range bound here, and really we just don't have that opposite color candle right here on the big
Yeah.
move. So yeah, very, very, very tough to see that. And then let's jump on this 15 that Susan kind
So
of
do
keeps.
you, going back to that big drop, do you dare to jump in? And if you do, where? Of course, it's easy to see it after the fact because you know it dropped,
Yeah,
right?
this 1 hour. So here's an indicator that kind of popped up because I switched templates real quick. But these yellow lines,
Mhm.
that's your 1 hour initial balance high up here. Hey, here's where we did go in the first
What
hour.
is
You can
that
kind of see the
indicator?
rejected.
Mine somehow got deleted. What is that
This
indicator?
this right here would be the ORB is what it's
ORB.
called.
And
Yeah, and then I've kind of got
that's
the
in
60.
the that's in our thing.
Yep.
Okay.
But
And
we
so
were
that's where
wanting
I've got these yellow lines here because, and then under the inputs, I've got 60 minutes. And so utilizing the 8:30 to 9:30 is where it kind of actually does line up on my chart correctly.
Is it just ORB or is it range breakout?
Looks
Opening.
like opening, yeah, ORB, and then opening range breakout. And then when you bring that up, is where you click on the settings, and then you got your inputs. By default, looks like it is 5 minutes. And so I changed that to 8:30 to 9:30 because I want a full 60 minutes.
Oh.
So make that 9:30. Make that 60. And then I just change it yellow so that it's different than for my 5-minute.
Mm.
And then once I set that up one time, then I come down here to where it says defaults, and I hit save as default. And that way it'll give me the 60 minutes and the yellow lines every time I click on that indicator, once it's in my favorites. So that's a way, meaning that's such a powerful range to always consider is that 60 minutes. Hey, what is your highest balance? Because a lot of times we're looking at this upper limit of this first hour of the US market. Hey, is it resistance or is it support? Then we look at the bottom part after 60 minutes. We breached it. Is it now resistance, which it was, or is it are things going to bounce off of it and it's support? Well, today it breaks through it. It comes all the way down. We're looking at a 15-minute time frame, but we come through it. The very next candle, it does not come back up. So that's a very bearish sign. So then you could look at, okay, I'm only looking for bearish entries at this point because I'm below my 60-minute opening range.
and but we never went above the 50. That big red line.
And there's your 60-minute 50.
Never went
We're
below.
above it. So again, we've got to be careful because we're in a bullish construct. So even though we're below our 60-minute, we're above our 1 hourly 50 EMA, which also says, hey, be careful. It's a counter trend trade because your overall trend is still bullish on a larger time frame. So yes, that's what makes today even that much more difficult.
Mhm.
Now, because we end up the 60-minute range is clear down here, but if we're kind of looking at some bounces, you know, we finally make it up through here, it stays above it here, these candles stay above it, these candles stay above it, but I've got these lower highs here. And that's the other thing that I'm really looking at.
Long trend line.
Drawing a trend line. So, hey, lower high, rejection of VWAP here. So I'm like, hey, I'm going to go ahead and consider getting in. So again, it's not opposite colored candle 3-minute time frame 10 EMA. But again, I always ask myself, what is your reason to get in the trade? Okay, I got a bot kind of going off in the background. I'm seeing that I'm breaking this range right here. So I'm like, and plus I've got kind of an opportunity to, are we going to come back down? Is this a magnet? You know, even though it's counter trend trade, but when we finally broke through this range, she moved pretty good.
Mhm.
And then of course it just stayed there the rest of the day, went sideways.
Yeah.
That was today in a nutshell. But losing up here, and I was playing long above VWAP, and then I waited, and then all of a sudden get rejected a VWAP,
Mhm.
and then I was able to get in right there.
I'm going to start looking at it a little differently.
Yeah.
I waited at the top of that black candle, that long bear run. I waited and I waited and I waited and I waited till that white candle came in, and then I got in.
Then it's too
Yeah,
late. Bounce.
And then waited
yeah,
till the black came in, and then
yeah. It's tough.
yeah,
That's
I'm
why
like,
it's sometimes it pays to not trade every day.
Mhm.
You know,
well, it would have the last 2 days.
I know,
and the
right?
and the reality for me is this looks like a good winner, but the little scalp that I did down here for an extra 200 on that other time frame, that was really my only profit today. I happened to carry over. I had like 600 in profit from Globex last night. I gave that all back through here. And so I was actually a little bit down when I entered this trade, and then I was basically break even with this 2.2 win. I was just break even, and I went ahead and did a quick little scalp for 200. It was like, okay, I'm at least profitable for the US session today, and then I ended up a little over 900 for the session, but US session, no. I struggled up through here.
Mhm.
Looking back, I see exactly what I did wrong, and I was trying to be too cool and recognize these gaps up here, and I got my stops too tight when I should have recognized, dude, you had the most beautiful stop down here, basically at the low, you know, within the first 30 minutes of the session. And I definitely had my 1.2, and I should have been done by the time we hit price up here at 1.2, would have been done.
But it got wicked out there too.
Yeah. And I got wicked out just because I was foolish on my stops, and I moved them up too quick.
Just like, I fight
We kind of
myself
go,
good, but then I turn around and hold it for one.
yeah,
All the way, kicking me completely out of the account. You know, I lost my trailing
wow.
drawdown.
Ah,
It's practice with one.
so frustrating.
This learning curve is flat right now.
This learning curve is
Yeah, here's a
Flat.
15-minute time frame, and you can kind of see if we're kind of visualizing, hey, look at all these wicks, you know, in this price area here. And then all of a sudden, you know, if we're looking at these lower highs,
Yep.
you know, this again, moving average VWAP, and here's the 10 and the 20, and we get that rejection here. There's something to kind of keep in mind is again, this could easily be a trapping wick that comes
Mhm.
down, but
At
up
what
here
point do you
was
enter there?
kind of, what's that?
At what point do you enter? Do you wait for all those underneath all those wicks, like right in there?
That would be, if we go to a smaller time frame and we kind of seen on the 3 minute, again, it
Yeah.
was bear, 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 bear.
Yeah.
When it come back up, the only thing you can do is like, here's we're bouncing off of support again, but we kind of see this rejection right here and our trend, our lower highs. That's where, hey, got that wick right here. You could kind of minimize your risk. Hey, here's your stop, get the right size, and go ahead and play the breakout there is a way.
What's that
And
dotted line you have on there? The yellow.
that's this kind of volume control, volume profile.
Oh,
So it's kind of updating with
so it's
current market, but that's kind of lets me know, hey, you can kind of see all these candles right here. This was actually the highest amount of volume at what price at this time right here. So that's another thing. If we're clear up here and you got this volume profile down here, hey, price likes to come back down because there's a lot of buyers and sellers out there that are interested in the price in this price range. So as you get up away from this high volume area, hey, your stops need to be below that again because price is going to come back down. And, even if it remains bullish, that's kind of where you see this dotted line kind of shoot up a little bit here because price goes up. So the average price that people were willing to pay actually increased a little bit right through here. And then it kind of come back down when all these sellers came in. It kind of brought it down here and then it stayed here for a while. There was a lot more volume early in the session where it didn't. All this volume down here, but you can kind of see how the volume's decreasing. The volume profile really didn't change all that much. Which again is another reason to be cautious
that's not
down
the point
here.
of control though, is it? That's not point of control.
It's the kind of a developing point of control.
Oh.
So like this developing right here. So point of control is the bright, big red one, but this orange is kind of your developing. So here's like current point of control now, real time is clear down here based on this volume. But that's us going into Globex now.
And you make money on Globex?
Not really, Susan. Now I've had some of my best days, but it's hit or miss. So I really do steer away from it a little bit. I might use evaluation accounts. I mean, that account here was a funded account that I was trading this morning and yesterday, but it was what did I do yesterday? It was fairly early. Yeah, it was right in here. I didn't I think I was pretty comfortable with these lower highs and I ended up getting in and I usually will trade larger size in Globex because it moves so much slower.
Yeah.
And then if you get, 10 points with a mini or two, that really can add up and it just takes the edge off for the next day. But I had some pretty clear trend here because I think it was before, because my wife come home around this time and I was done. So it was right in here, Globex yesterday. Don't always get that kind of a trend, and then late at night it really turned out well. But I think I was expecting a fairly strong pullback through the night, but it didn't.
I've
It
had
actually
some trades on at Globex.
Yeah, there's some times because I'll notice with gold, a lot of times if I wait usually a little after 5 p.m. My time right here is a little after 5. It seems like we can start getting some of that movement.
Oh.
Now that was
and again,
yeah.
Yeah. So you got this you break out of this range here with gold, you got this lower high here, and look at this nice bounce off of our 1 hour 50 EMA. you know, and then the fact that it comes up and here's your liquidity. Here's where a lot of people get trapped. They're thinking they're bullish and they're maybe playing the breakout of this range and they're successful for a little bit, but that's pretty typical with gold. So here's your liquidity. Here's where a lot of bulls get trapped, and it comes right back down and then takes out that preceding low. So here's your range, kind of breaks above it, comes down, and then it actually breaks back above this range. So gold is very, very, I mean, you get a lot of this, you know, make a higher high, make a lower low, make a higher high, a lower low.
Yeah.
You know, and if you study it really well, I think there's some incredible opportunities in gold. I don't trade it enough. But here's a 3-minute time frame. I mean, if we were just to do 10 EMA on it, you know, it breaks out of this range, let it come down, get a lower low. Don't really have a good candle here, but you do right here. You know, if you were to get in right there on, you know, again, kind of follow the rules, make it objective based. Get in below the 20 and below this majority of this bull move, and you know there's definitely a 1.2 there, and then there's a lot of movement here, but if you just kind of objectively, hey, my stop's up above my 20, I get in below this first bull candle closing below the 10, you know, there's another 1.2 there. You know, fairly good risk to reward. Looking over here, it's like, okay, I do have to at least come and retest this low. So again, it's as objective as you can be is better. You know, it's just the idea is like, dang, it's like, why do I have to wait until 50% of the move before I get in?
I know, right?
Yeah, and that just
That's
happens to be this strategy. But it's one of those things. Hey, if you do wait, then you're not chasing or forcing it. You know, you more times than you got an edge because of many times it can be profitable. But we got to find out too. It's like, hey, for me to be profitable over time, you know, do I need to stay in for those 1.2s? And if I can not lose a full R majority of my losses, then that gives you the edge. You know, and I think with gold and moving like this, you know, if we get in, let's just use this as an example, and we're up here above our 20 and above this here's kind of a little indecision. So we'll say, hey, here's a 15-minute or 15 minutes of bearish move. So at a minimum, my stop's got to be above my 20 and above the most recent big bear move. You know, so I set my target at 1.2, which we can see we actually hit it right here. But we get triggered in right here. So 1, 2, 3, 4, 5, 6, 7 candles. So just rules based, I wait at least 21 minutes. The candles are not all that large. I've got fairly good trend. That's when I can now say, hey, at least I'm going to reduce at least down to about a half of an R. You know, I don't want to stop myself out if I come back up and retest the VWAP or my, you know, some of these key moving averages. So I don't want to move my stop down too tight, too fast. But then I wait another 7 candles, 1, 2, 3, 4, 5. Well, I hit my target at 1.2 before I even have to move my stop again. So that 20 minutes, you know, on a 3-minute time frame, you know, 21 minutes, you know, 7 candles is a pretty good rule to follow. You know, it really does. Over time, it's pretty darn good. It's just that first hour, like we had today, it was just range bound. You know, in that first hour, we're seeing upper limit and a lower limit, and things just bounce off of it for 2 hours. You know, and that's where we have to recognize right away. It's like, okay, wait a minute here. My 10 EMA, I'm going to get in at the upper part of the range going long, and my entry is going to be at the lower limit going short, and I'm going to get stopped out multiple times.
Yeah.
So
that was my tendency today.
all right, where I want to finish up today is I'm going to shift to a larger time frame. Let's go to a 10 EMA template, but I want to do just a 15-minute time frame. I'll kind of show you another key area that we want to respect, and especially as we start going into Globex right now. And notice the bottom of this range right here. Okay, it breaks down, and again, larger time frame is key here. But you got to look at the bottom of this. Really, you take 3 candles. You got a wick up here, and then you've got this wick right here. So between this wick and between this wick is what you call a fair value gap. You've probably heard that term many, many times and never really applied it, to your trading strategy. But all you do is you got that bottom part of that wick and the upper part of that wick. And here is, we can expect price to come and fill this fair value gap. In other words, price is going to come back probably tonight sometime, and it's going to fill this gap. At the same time, we don't know which order, but we actually also have this gap here. So those are 2 very key areas. Hey, if things kind of take off and go bullish, here's where I can expect, if things overall remain bearish, hey, I can expect some rejection up in this area because of this gap that needs to be filled. And this is what you call a fair value gap. Are we going to come down and fill this gap before we go up here? Or is this going to just get rejected, roll back over, and then this gap here carries a little bit more weight than this gap, but they're both valid gaps that, hey, probably within this session, Wednesday, which is already started, we've got to realize that, hey, there is a high expectancy for price to come all the way back up into here because of this gap.
Okay.
And at the same time, we've got another gap here. Again, 1, 2, these 3 candles. You look at the upper part of this wick, and this very next candle, it leaves this gap right here. Have no clue which one it's going to go fill first. But those are things that should always be part of your thinking and analysis, and today, it was beautiful in the sense, again, looking at a larger time frame. 15 is about as small as we want to go, but look, there's no gaps on this 15-minute, and I was looking at gaps on a 7-minute, which is just not appropriate. But there's just, my original stop was I think probably this candle here on this, when I was on a 7-minute time frame. I had a beautiful stop right there. There were no gaps. If I would have looked at the larger, I would have left my stop there and I would have hit my target up in here. So again, when it comes to
So then
risk,
you look at this on a 15 and then you go down to a 5 and a 3.
We enter on our smaller time frames. That's our criteria to get in.
Yeah.
But our key price zones structure is always going to be, we're making our financial decisions based on the larger time frame. And that is a hard lesson to learn for most, but it has to be understood. It has to be understood. If I would have kept my mind on the 15-minute, what was going on here, I would not have entered any trade in here. Zero. Because it starts here, indecision. Well, what does a 15-minute indecision candle tell us?
Yeah.
Indecision.
What?
And then you got this nice,
Huge
beautiful
moves.
liquidation right here. Okay, so, and then just jump over here. Let's go side by side. And over here, let's look at our 7-minute. So this candle right here is what uh, got me in, and that's fine on a smaller time frame. You know, I had a reason. Again, strategy for me was, hey, I wick down into beautiful support. It's a beautiful hammer candle. You know, so I was good with that. That's not 10 EMA, but that's a strategy that I've just been trying to gain more confidence in because it's pretty darn valuable. You know, so it was this nice wick down into support, overall bullish, but when I moved my stop up too tight and then I got wicked out over here, stupid. If I would have looked at the 15 and said, hey, wait a minute, this gap here on the 7-minute does not exist over here on the larger time frame. There is no fair value gap. There is no reason to move my stop up towards the bottom of this gap. You know, in other words, I moved it up to where I was just a little bit out of the money, you know, but I'm like, I got in here. So I was thinking I was being pretty smart. I'm like, oh, look at this beautiful gap, this wick here, that wick there. Looking at a 15-minute time frame, there's no such gap. And so that's why it just meant nothing over here on the smaller time frame. Meant nothing.
The wick, so the gap's all in there on the 15 minutes.
Yeah. Yeah, I mean, there's just no gap.
Plus,
Indecision here, these wicks, there's just no gap. No gap here. No gap here. You know, here's yeah, it's not even with these 3 candles, no gap. We get rejection here. Here's our first, this candle comes down, the wick comes down to here, and then we have this big body of this candle here. This candle has a wick. Here's our first official gap. So it kind of goes back, Susan, what you were talking about before. It's like you wait. Well, we have a very big move down here, but if we understand that there's a big fair value gap up here, we're not going to be too keen to continue looking for short down here. You know, and then again, where's our, you know, our larger 1 hour, you know, our 50 EMA clear down here, you know, that's attractive. Well, it's kind of like a magnet, but we got to realize that, wait a minute here, I've got a pretty large gap that price is going to want to come back and fill. I don't know when it is, but statistically, it's going to fill this gap sooner rather than later. So we're not really looking for too many bearish trades here. If we are, we're going to get in and get out. Get in and get out. So the smaller time frame, I ended up getting in, but I got in while the gap was being created.
Right. Yeah. Seems like I'm always late to the party, right? It's like, dang, it moves so fast that when you know, think about it so long and then I'm like, ah.
Then you jump in and then you're out.
Yeah, exactly.
Recognizing this range is the takeaway for today.
Yeah.
You know, it's like, hey, wait a minute here. You know, beautiful support coming up here. It kind of comes up. Hey, recognize that this is liquidity up here. You know, the bulls could not sustain it. You created a higher high, but you got rejection. It comes right back down. The bodies, these candles, you got this wick here, but you see this rejection. You see this. I'm sorry, you kind of see the support here. You see the support here. But all of a sudden, you're like, wait a minute, I'm getting rejected again. And one of the things that you look at too, let me get rid of this. So here's like another, see this gap right here. It's another thing I kind of wanted to show. So this is on a 7-minute, but it doesn't exist over here, but just kind of see how, well, it actually, this very next candle, there's no gap. So just the gaps, forget them on the smaller time frames. It's too much price action. That larger time frame is so key. And this right here just says, hey, wait a minute here. And I expect, just kind of looking at things right now, things are going to kind of roll. But I think we're going to come back up into this area. And then we do have a gap here to fill out. If it does not fill tonight, then tomorrow during US session, watch this become possible support, you know, if things kind of do tend bullish overall. But I think one of the most important things to kind of support and resistance, we talk about that until we're blue in the face. But these gaps on like the 15-minute or larger, you know, these are your key support and resistance areas. There's an imbalance, you know, in the market on the larger time frame, and the market wants to balance itself. And so here's a fair value gap. And so until this gap is filled, there's an imbalance that we have to respect and consider, you know, on our smaller time frame entries.
Also, too, we running along. This is where at the beginning at the moment, and then I think we bounced off. You know,
Say that again, Susan. I really had a hard time.
I think we were, what, you know, I call it range bound, where we were going up and down. I think we were
Yeah.
sitting next time too.
Yeah.
Which is holding it in place.
Yeah, real interesting how we again, Calvin Williams, he kind of talks about this 50-minute, I'm sorry, the 1 hour moving average. You know, look how it just kind of comes and bounces right off of that.
Mhm.
So I mean, it was a magnet, you know, and we're looking at our 7-minute time frame. We're clear up here, and it's like so far away, but dang, we broke out of this range and it just come literally right down and bounced right off of it. So you can't tell me there's not a little emotion or sentiment tied to that.
Mm-hmm.
So that really gives credibility to this 1 hour moving average that we have right here. Yeah, incredible bounce right off of that.
Is that 50 a simple or exponential?
Mine's exponential.
Yeah. If he
And
looked at
it's,
it, he said he didn't think it made any difference.
oh, I lied to you. Mine is simple. This one here is simple.
Yours is
That is a
simple.
simple, yeah.
Well, that's the way he does it, but he put it on EMA and he said he didn't think it made that.
Yeah. Yeah, and there's some truth to that, because if I've got a simple or an EMA, yeah, they're going to look a little bit different on our charts,
Mm-hmm.
but it's that consistency. Hey, if you're above specific, if it's a 200, if you're above the 100 EMA or the 50 SMA or 50 EMA, then only look for longs. If you're below it, then only look for shorts. That's the concept, which is very powerful. You know, because here's a day where it's like, man, it's like, did we have any good 10 EMA entries to go short? Nope. Were we above our bullish indicator where we should only be looking for longs? Yep. So if we didn't go short today, wouldn't you feel a little bit better?
Mm-hmm.
You know, I mean, it was tough to go short, you know, utilizing the 10 EMA. We just didn't really get a good candle right where we wanted it,
And you were above
you
the
know,
50, and you were above the 50.
and we're above the 50. So if we wouldn't have traded today, it would have been fine. Would have been absolutely fine.
Yeah,
So,
for sure.
all right. Any questions on that? I hope that helps a little bit. These gaps are key.
Mm-hmm.
U.S.
Something
market.
I've never heard of before, actually.
Yeah, and I've not taught it much because I haven't studied it much, but ICT concepts is where I'm spending a little bit of my study, you know, and a lot of that's India Charlie Tango. And they use a lot of complex acronyms and verbiage. It's to me, it's not all that easy, but the more I listen to them, the more I'm like, dang, there's larger market structure concepts that are very powerful, you know, and that's where I'm going to be probably spending a lot of my additional study, is kind of making sure I kind of understand that a little bit. And it's just the same terms that we use same concepts, but they just kind of use the specific terms. But these fair value gaps on the larger time frame, that is something that I really believe I've not utilized all that much. I've just kind of utilized key support, key resistant areas, but now appreciating, hey, just as simple as it is to look at a 15-minute time frame, plot some fair value gaps, and it's like, good grief, over and over and over again, you know, they actually kind of come into play.
Just gives you another tool in your tool belt, right?
Yeah. If I can take a 60% win rate and turn it into 65 by fair value gap, that's huge. That's huge. Keeping everything else the same, 5%
because
change on win rate.
Looking at that one on your left screen there, I would have thought, well, that run is going to keep going down, right?
Yeah.
Going to want to jump into that short.
Yeah, it looks very bearish, and what makes it kind of tough, or even kind of a little tough today, is before this was an inverted star at one point. Right here was like our bottom, and there was a lot of room to come down and retest the previous day's low.
Yeah.
So it wasn't like an overwhelming big bear move yet. And it's like, oh, here we go. Look at this. Bears are in charge, and they keep driving it down. And it's like, hey, it's very feasible to come down and at least bounce off the 10 EMA. But then we go back and look at smaller time frame, but yet not the 3 minute. And so it comes down through that, and it comes down, and it just kind of stops. And again, that's a big move, but it's like, here's this big fair value gap magnet, and price is just continuing working its way back up towards it. So it never did make it down to the previous day's low, which is clear. We weren't that far from it, but here's previous day's low. That's you see this big bear move, and it rolls up here, and it rejects and comes back down. It's like, hey, here's my target for the day. And it never did. But all of a sudden, hey, I've got this. If this would have left a little more balance in the market here and not been so quick, in other words, if things would have kind of come down and filled a gap, we might have rolled on over. We just, when you have those smaller candles and bear, bull, bear, bull, and it's just lower lows and lower highs, look to get in anywhere almost. But when you've got this big move, quick, fast, and furious, large volume, hey, there's an imbalance up above here. That's where that's why we don't want to chase, because are we aware that we can actually kind of zoom out, look at a larger time frame, and say, hey, there's a pretty big imbalance here. We really did not have, black and white, where things were just kind of balanced, where the bears were a little more aggressive than the bulls, but there was pretty good balance, even though we were making lower lows and lower highs. Here big imbalance was left behind, and so it just couldn't continue. And that is probably one of the most powerful things to really grasp on a day like today.
Yeah, because it's frustrating when you see that big drop and you miss it, and you're thinking, well, is it going to keep going? How do you judge?
Yeah.
Right, because it's below the 10, everything's above it, and you just think automatically it's going to keep going.
And
just going to dive in.
And that is exactly why we don't want to chase. But another thing to kind of keep in mind here is hey, we could draw a line there, and then again, it happens to be this purple line, which is our Globex low. But here we're just range bound again.
Yeah, right on the Globex low.
And when we look for these breaks that are below, so this is a violation of this lower part of the range, just like this is a violation of the upper part. That's where people are getting trapped. This is where people get trapped. So we get out of the market, we let this go. We don't have any time left today, but now we finally break above this range.
So when people are getting trapped, it means that they're thinking it's going to keep going down.
Exactly.
It bounces back up. What is their move?
sell.
market structure and
Are they trying to get, are they getting out at any cost at that point?
well, if they're in here, okay, they're taking
Yes.
profits for one.
Yep,
Okay, so that's where you got some bulls coming in because even though the bears they're buying to cover,
right.
and so that turns around and creates kind of a bullish move. Bears come in, they're short, short, short. I'm taking profits. I'm
Mhm.
buying to
Mhm.
cover. And so all of a sudden you think a bunch of buyers are coming in. Well, actually, it's just bears taking profit. So that gives
Right.
us a little pullback. Okay, well, the bears say, nope, I'm back in. Well, now at the bottom, kind of the bodies of these candles right here, Globex low, it's kind of like that's where smart money institutions are they're liquidating folks here. So there was this was a big black candle for a moment. And now the trap is set. Institutions come in, bulls come in and trap all these bears down here. And we never really come back down below this area. There was another attempt right there. But again, some more people got trapped. And then it just kind of went sideways from there. But it did break above here. But again, this is a whole different beast when we start talking 4 p.m. Eastern Standard Time. So again, US market closed right here. This is actually the first hour of US markets closed right through here. This is that last hour before the futures market actually closes at 5 p.m. Eastern Standard Time.
Yeah.
So that's a whole
Okay.
different demographic of people trading.
Mm.
So once we got down here, trap was set, but it just was range bound. For the rest of the US market, range bound. Finished fairly strong right here. So that can be indicative too that hey, institutions and large money, they were a little bullish as the US market ended today. They made a decision. It's like, hey, I want to get my position before the US market closes.
They all think.
So that's something to consider, even that does carry over to US market tomorrow. And if you've got something like we had today where it's a big gap up, well then all this smart money that bought here on this last 15 minutes before the US market closed, well, they're going to be selling to cover.
Mm.
Let's say it does, Globex kind of trends up all night. So we open up here tomorrow, just kind of like we did like here. Right here, look at this candle, 11:30. So smart money kind of coming in, but we ended, here's 12 o'clock right here. So we ended right here, and you look where we come from yesterday. So right, US market closes here, it gaps up, and then we wonder why there's, a lot of volatility. Well, there's a lot of smart money over here that did buy. Well, they sold. A lot of this indecision right here, then big bear move right here. A lot of this is smart money institutions buying to cover because they actually got in over here. Whoever bought over here before the US market closed, well, they come in and took some profits when the market opened today. So, and that's another reason we've got those gaps. So, Susan, you echoed it. We opened up, US market opened up today a lot higher than it closed yesterday. That's that bullish gap. Well, the gap doesn't mean it's a bearish day because we pull down and fill the gap. That is a bunch of bulls that are selling to take profits, from where their positions from the day prior. And then we actually expect, this right here, bulls are taking profits from where the market closed yesterday. And so the trend actually continues, but it loses steam up in here.
Mm.
But this was a fairly bullish move. We're bouncing off of this volume weighted average price. I was bullish. I was bullish even through here. It wasn't until we got rejected here and then we come in here and I'm like, okay, maybe this is not as bullish as I think it is. And then boom, this rejection here, and then she falls in, and I just happened to get in it today. Just all I did was save my honey.
I was seeing it as a head and shoulders.
Yep. Yep. Exactly right. I mean, that is an absolute astute perspective. You see that, Rhonda?
What was that? Say that again.
That's a head and shoulders.
Oh, yeah.
Yeah, so you've got kind of the left shoulder here, the head, and then
Yep.
the right shoulder here, or all this right here, and it just kind of weakens the shoulder, just getting weaker and weaker, and then she finally breaks through.
Mm-hmm.
So,
Yeah.
all right, I'm gonna end it there,
Okay.
unless you got any questions or go backs.
No, I'm glad I wasn't the only one that thought it was a tough day.
No, it was, and Tenia May, and
Few
actually, like my
days.
sister, she was saying, "Hey, these are range bound like 50 points." She's like, "I'm done. I'm gonna
Yeah.
go to work," and then I'm like, "Good move, good move." Um,
You're
you know,
you got the
so the
money in the bank. Go home.
yeah.
Go away.
So, but from an advanced perspective, don't change strategy or anything, but just start recognizing that, hey, wait a minute here. We've like these yellow lines, we've talked about the power of that 60-minute range.
Mm-hmm.
One, two, wait until there's a decision out of this range. And when you see this liquidity at the breach, the upper part of the range, you're really going to look to go short the opposite direction.
Mm-hmm.
And that's exactly what you have here. Here's your range box here.
Yeah.
When you see this come in, now you actually look for it to come, you're looking for long up above this range.
Mm-hmm.
And that is where there's going to be that's going to transform, has a potential to transform a lot of your trading. Recognizing here, wait to see exactly what the setup is. Like, hey, here's a liquidity breaking through this upper range, which is bearish. We think this is bullish,
Right.
but all of a sudden you start looking at that. Hey, look at this range. Here's the liquidity on the high side. That's bearish. So then we really look for it to come back down. We're looking for entries below here. We don't necessarily want to get caught getting in a trap and start having that megaphone direction, higher highs, lower lows, higher highs, lower lows. That's really where it gets tough. And that does occur from time to time. But these breaches of the upper or lower limits, like even this one right here, here's where we got a breach. We don't have enough information to know that we're even range bound yet, but here's a trap set for quite a few bears that were kind of, hey, I'm going short because of this gap. Well, institutions come in and said, nope, we're going to go long. And then we go up and we make a higher high. But this is kind of a repetitive pattern.
Yeah. Head and
that you're gonna
shoulders.
see.
Yeah.
Yeah, and then Head and Shoulders is definitely there. So I got to drop here and return a phone call real quick, but I hope today was adding some value. Next week, let's meet again. But I kind of want to kind of wrap up this meeting here with, hey, what's next in the shoot? And I'll talk a little bit more about push button and why I think it's really important for your continuing education. And I'll put a plug in for that there. And then some of the other things that I do as far as, hey, how do I keep myself growing in this industry and protecting my bottom line? And that's really the most important, because we just got to admit, we got to be students. Well, it's a lifetime skill.
Yeah.
But hey, a year or 2 years to be able to stay in the game while we're gaining the confidence and establishing that consistency in our trading plan. It does take time. So don't ever feel like, I'm not good at this. No, follow your plan and don't trade every day. Don't roll the dice. Does it meet your criteria? Because I just so confident that in time, with good practice and some discipline, breakthrough comes.
For sure.
So I believe the reason there's 90% of the people fail in this industry is because they give up and they put too much risk out there. And so then they can't afford it. They can't afford to stay in and continue doing what they're doing. And that's where we've got to have the right risk and definitely trade other people's money for the time being.
For sure.
But that 10%, 15, 10% of success. It's just a matter of it's the people that, hey, willing to say, hey, I'm not going to give up. I believe that I can do this. And so that's my approach. And I do believe that to be true for both of you. So so
Okay.
just be coachable and continue this to determine most days of the week. Hey, I want to affirm my belief. I want to learn something new, that does not change your plan, because every one of us can have a different plan and have it be very successful. It's when it's a little bit of Susan's plan, a little bit of Jake's plan, a little bit of Rhonda's, and you change it up every day. Your mind, your brain, how does it know which one it's doing today? So you really got to come up with your own, and then be consistent with that, and then validate that over time. But it's going to be very exciting to see what you guys do over the next few months. So
I think I
just
need
keep,
to take some meditation before.
being grounded before you start. Absolutely. It's like, here's what I'm looking for. Here's why. And here's the 3 reasons I'm getting into this trade. If you can't give yourself at least 3 reasons that are consistent, don't get in the trade. It means you're not grounded yet. Don't chase
That's a
it.
true story right there.
Yeah.
True story.
So
Thanks, Jake. Thanks.
you
Okay,
bet.
have a good week.
You do the same. It was sure
Okay.
enjoyable today. Talk to you soon.
Okay, bye-bye.
Bye.
Thank you for calling the Fort Greely Army Medical.
Oh.